I'm going to talk without the microphone as long as you can all hear me clearly. Is that okay? Okay, great. My name is Chris Potty. I'm the Manager of Compliance and SRO Oversight with the Nova Scotia Securities Commission, and part of what we do in that section of the Commission is conduct compliance reviews of those firms and individuals who are registered in Nova Scotia to sell investments. So we make sure that they are compliant with Nova Scotia securities laws and ensure that the investments that they sell you are suitable. Just a couple of things that we wanted to mention before we actually get going with the presentation is some things that we can do and can't do. So we can't tell you which investments to buy, but we can give you information about investments and answer questions. We can't give you the name of an advisor, but we can provide resources to help you choose an advisor. We can give you contact information so you can call us if you need us. You know that we're here now if you didn't before. And we can investigate complaints. Those are just some of the things that we can do. Okay.
And we're going to have a Q&A session at the end of it, so if you could hold all questions to that, would be great. And we're going to put the microphone out, so if you're comfortable to come down and answer your question into the mic so everyone can hear, and it'll also be go to the camera easier that way. We're recording this session to put online for anyone who can't be here today. Just so everyone knows that. It'll be on our website either by the end of this week or early next week, depending on how quickly we can get the video. So, you ready?
Yeah.
Okay. Before the session, how many people actually knew the Nova Scotia Securities Commission existed? And how many of those people with their hands up actually know what we do? Okay. That's generally, when we do talks like this, about half know we exist and about half of those people actually know what we do. So that's generally, hopefully we'll change that today. So Nova Scotia Securities Commission, every province and territory in Canada has a securities regulator. In Nova Scotia, that's us, the Nova Scotia Securities Commission. And what we do, we regulate Nova Scotia's capital markets to protect Nova Scotia investors by requiring licensing, regulation, and disclosure. We issue warnings of fraud, schemes, and cautions around speculative investments through press releases and on our website and through social media. And we foster fair and efficient markets. And one of our other mandates is to help educate Nova Scotia investors to help make them informed decisions when it comes to investments through presentations like this and other outreach initiatives. So the commission itself is made up of 4 main branches: investor education, which is myself, which is also part of the communications branch. We do, again, talks like this. We do public education initiatives. We run our website and social media. We do things around Fraud Prevention Month, Investor Education Month. We just try to educate the public as best we can when it comes to investing to help them make informed decisions. Policy and market regulation, which is Chris is part of. They develop legislation, rules, and policy around investing in Nova Scotia. They deal with the registration of dealers, advisors, and fund managers. They also deal with the compliance around those dealers and advisors, examinations for firms and advisors to ensure they are following securities law. Our corporate finance division, that deals with the regulation of issuers, reporting issuers, and public companies. The ones that most people know most in this province are Emera and Empire, the SOBIs. There's approximately 33 reporting issuers in Nova Scotia right now, as well as a number of CDIFs, which are small community-based organizations. The most, one example of that is Just Us Coffee, and Horton Ridge Malt Grain Corporation, which is in the Valley, is also a CDIF. The corporate finance is what they deal with is the regulation around the issuance and trading securities by these companies who do so to raise capital. So they monitor ongoing disclosure of information requirements for these companies, such as the release of financial statements, press releases, internal change reports to make sure they're doing what they're supposed to be doing. And our other division is the enforcement division. They investigate and prosecute violations of the Nova Securities laws. Basically, they enforce the Securities Act. They can lay fines and sanctions against violators who are found to violate securities law, but they do not criminally prosecute people. That is done by the RCMP, Halifax and Regional, or the public prosecution system. So anything through criminal has to go through a criminal court. We don't handle that.
So the enforcement branch that David was just speaking about, that's if you did have an issue with your advisor, serious issue, there's a way to lodge complaints, but it is through the enforcement division that you would lodge a complaint and they would investigate it, just so from what I was, to tie in what I was talking about earlier. So why do I need an advisor? Well, the majority of people don't have the knowledge, time, or inclination to want to deal with their own investments. I don't say that as a blanket statement. There may be some people in this audience that do have the knowledge, maybe don't have the time, maybe want to do it but don't have the knowledge. So you really need all three of those things in order to be dealing with your own investments without an advisor. So an advisor will do all those things for you. And in terms of your financial position, it's not just about investments. It's about how much money do you own? How much money do you owe? What are your investment goals in terms of buying a house or buying a rental property or going on a trip? It could be any of those types of things that an investment advisor will tie together for you into an investment plan. They'll also design a portfolio. So what we mean by that is what amount of your money needs to be in cash because you need it in 2 years, what amount needs to be in GICs or bonds, and what amount can be in securities. And there's a whole litany of different types of investments that could include. When choosing suitable investments, so I mentioned that earlier, that part of the mandate of the compliance section is to make sure that advisors in Nova Scotia are selling investments that are suitable for you specifically as an individual investor. So the main foundation of what they do is ensuring that the investments they choose for your portfolio are suitable. It's a big part of our legislation. It's something that we look at and take very seriously when we're conducting compliance examinations. So when you're speaking to an advisor and you're telling them that your risk is only low or that you need money in a short period of time, then you shouldn't be in a long-term investment, no matter what they say. You need the money soon. If you have a long-term time horizon and your risk is low, it doesn't necessarily mean that your investments can be in high-risk securities. Maybe some blue chip stocks, but not high risk. So it's something that they're trained to do, and a suitability requirement is something that we look at very seriously. They'll track your progress and adjust as necessary. So your advisor has a regulatory responsibility to meet with you on to provide information to you at specific times. You can request it more often. Within reason, your advisor should accommodate you. And then when you meet, you can talk about how things are going, if anything's changed. Did you get married? Did you have a baby? Those types of things. Did you change jobs? And then adjust the plan accordingly. So going back to what I said earlier, how do I choose an investment advisor? Well, we have the resources to help you do that. They're on our website. Did we provide the slide deck? Does it? Okay, so I think we are going to provide the slide deck, and in some of those resources that you picked up is our website and the Before You Invest website. You might, if you have a Twitter account, follow us on Twitter. We post interesting information all the time, or David does, specifically. Yeah. One important thing to remember is the difference between different advisors that you can deal with. And one distinction that we wanted to make sure we were clear about was financial planner versus advisor. So some advisors that are registered with us also have a financial planning designation. But if there is someone out there who is simply doing or strictly doing financial planning, they do not have to be registered with us. They cannot give you specific investment advice. They can take all of your information and they can do a financial plan for you that does not include what types of investments you should buy, and they can't sell them to you. Does that make sense? So an advisor can have that financial planning designation and do both, but there are some people out there that are just doing financial planning, and that doesn't include being registered with us. They're not selling securities, or shouldn't be because they have no registration. The Before You Invest checklist. That is a really good resource. Again, not using a blanket statement, but we do run into some investors that we talk to that say, I don't feel comfortable asking my advisor these questions. I feel like maybe I'm being rude or I don't trust them. Well, you can take this resource to your meetings if you're trying to choose an advisor, and it's a checklist of questions to ask, and you can say, I got this off the Nova Scotia Securities website, or they gave it to me and they indicated we should use this when we're interviewing an advisor, and you're not going to find any advisors that aren't going to answer those questions. Not that they wouldn't anyway, but if they were inclined not to, or if that gives you a better comfort level, then that's a good resource for you to use. And one thing I wanted to say about working with a financial advisor is they do have a very significant responsibility to ensure that your investments are suitable. But in order to do that, they also need information from you. So it's important that you find an advisor that you feel comfortable with and trust enough to give them your full financial information so that they can make the right suggestions to you for an investment structure. I would say, again, not a generalized statement, that if you're holding back, it may not be the only reason, but it may be a bit of a red flag that you don't have complete comfort in that situation, and maybe it's something to think about.
Okay.
What was the previous? Was that
Let's just check registration.
Oh, okay.
So one thing we always advise on, if you have an advisor or if you're looking for advisors, to always check the registration. To sell or advise about on securities in Nova Scotia, you have to be registered with us or another securities regulator within Canada. So on the CSA website, on our website, there's a link to the check registration site, which you can find at arethéregistered.ca. So if you go to the website, you'll go right here, and there's the National Registration Search. Under that, you can enter any individual or firm name, and it will tell you if that person is registered in our province to sell or advise on securities. It'll also tell you what firm they're registered with and what category of registration they have, which we'll go into in a few minutes. The category of registration determines what they can sell and advise you, because there's different categories which limit what products and services you can sell or advise on. So if you're looking for an advisor, or if you have an advisor and you haven't checked the registration already, we recommend you do that, just to make sure. There's also a disciplined persons list on the CSA website, which has a database of anyone who's been sanctioned for any disciplinary reason in Canada by a securities regulator. This could be a simple thing as not filing paperwork on time, or it could be something as pertinent as scamming someone and taking their money. So it works the same way. You go onto this website, you enter a person's name or a firm's name, and it'll tell you if anywhere in Canada a securities regulator has sanctioned them or if they violated securities law in any way. It'll tell you what they did, what the penalty was for what they did, and if there are any ongoing penalties for that as well. So we recommend anyone while looking for an advisor or a firm to obviously check that out as well, because it'll give you some peace of mind about what they've done in the past, and also let you decide on if you want to work with that person depending on what they've done potentially.
I was mentioning earlier there's different categories of registration, and we wanted to make that financial planning designation differentiation. So starting with scholarship plan dealers, what they can sell is, as it states, they're very limited. A scholarship plan dealer, and I don't know if any of you are thinking about taking some of that money and putting it into a scholarship plan, but if you are, all they can sell is the scholarship plan investment for the firm that they work for. That's it. That's all they can sell. And then you move up to all the way to portfolio manager. Exempt market dealers can only sell the exempt market product. Exempt market products. Usually it's one that they sell. Sometimes they sell a myriad of other exempt products. Mutual fund dealers, just mutual funds, exchange traded funds, ETFs, you've heard of that before. And so they're somewhat limited. Investment dealers are your securities dealers. They can sell you mutual funds, GICs, but mostly what they sell you are securities. So stocks, that type of thing. And then portfolio managers, well, they have some limitations, but not many limitations in what they can sell. There's so many things that come on the market now that there are still some rules around those that they may not be able to sell without certain registration or authorization. Now, the biggest difference between all of these registrations is that A portfolio manager manages your money without getting your signature all the time. You give them authorization to just manage your funds, make trades for you, and to manage it on an ongoing basis. You tend to pay a higher fee to deal with a portfolio manager because they offer a specific service that the others don't. Also, the education requirements to be registered as a portfolio manager are much higher than the other categories, and also the experience that they need in order for us to register them in that category. Probably most of you have heard about a lot of these investments. Although we did ask to hold questions to the end, what I am going to do is just ask if there are any hands from anyone that they would like me to go into any of these a little deeper. So savings bonds, Canada savings bonds are not going to be sold any longer. There are still some types of savings bonds around. One of the types of savings bonds, I use quotation marks because it's not really a savings bond, but it works in the same manner, is with the Government of Nova Scotia Employees Credit Union. Some of you may know about that. So they're offering another option, which is technically a savings account, but works the same way as the savings bonds. You can take the money out when you want. It has a low rate of interest, very secure. Treasury bills, you can buy those through banks. They're basically, they are like a cash investment. They're very safe as well. They can be cashed on a very short-term basis. Usually the minimum amount to purchase those is quite a bit higher though. And money market funds. So you can buy those. Money market fund is a mutual fund, but it's all cash. So you can put the money in there. With mutual funds, you probably know that you can take the money out at any time anyway. But the problem with that, if you have it in a money market fund, it's intended to be used that way, to take the money out at any time. If the money is in a different kind of mutual fund, like a bond fund or a dividend fund where it's in dividend-paying securities, those funds are not meant for you to take the money out at any time, even though you can. And that should be explained to you when you purchase them. Because they're holding longer-term investments, you could put the money in today and go to take it out a week from now, and the value could be down, sometimes significantly depending on the fund. GICs, everybody knows what those are. Guaranteed investment certificates, usually through a bank. Again, they are quite secure, but they are typically locked in for a specific period of time. You choose the period of time, 1 year, 3 years, 5 years, and depending on the time that you choose for the money to be invested that you're going to lend it to the bank will pay you more of a higher interest return on that investment. Bonds, and similar to bond funds, so mortgage and bond funds, and bond funds hold bonds in them. You can buy, again, corporate bonds. Typically, again, you need a higher amount of money to purchase those, typically, again, through a bank, that type of thing. And again, mutual funds, the mortgage and bond funds. So they're middle of the road because they hold mortgages and bonds. They are typically not as volatile as the securities mutual funds, but that being said, when interest rates start going up, bond rates come down, and so your bonds may not have as good of a rate of return as they have had previously. So your overall fund return will reflect that. Common shares, preferred shares, you can buy those individually through a securities dealer. You can also get a better exposure to a number of different securities if you buy them in a mutual fund. A mutual fund, you have to check them, they're all different, but there's many mutual funds out there that will hold a number of different securities in them. So you can invest $500 and get exposure to many more types of securities than you would if you buy them individually. It tends to even out your returns as well a little bit when you're in a mutual fund. Although there are blue chip preferred shares from bank shares, large dividend paying companies are usually quite stable as well. And then back to the mutual funds, exchange traded funds, ETFs, which are a grouping of different mutual funds. I think that was all the slide we had for that.
So as we said earlier, one of our mandates is to try and protect investors from scams, frauds, and other investment bad investments. So this is 4 things we tell people not to do whenever we do a presentation like this. So one of them is never sign blank documents. This may sound like common sense, but unfortunately a lot of people do this and it leads to trouble. So you may be meeting with your advisor and you want to be a quick meeting, so they'll give you a form and say, just sign at the bottom, I'll fill it in later. So maybe you're expecting to buy $500 worth of mutual funds, but they could take that form and change it to 5,000, change it to 100, change it wherever they want, because they have your signature at the bottom of the form to authorize whatever purchase they want to make. So never sign blank documents, no matter how much time you think it's going to save you. It could not save you a lot of time in the future. Don't avoid opening your mailed financial statements. I used to do that because I didn't understand what they meant. A lot of people do that because they don't know what they mean. But most people get a statement annually, quarterly, or biannually, so you get for a year to a year. Say you don't open that statement for any of your statements for a year. So you've gone 4 statements without opening it, and each one potentially could have been losing money. So you've gone a year with your investments losing a couple % each time. That adds up over time. By not opening those statements, you've not allowed yourself to change course on your investments, or at least to know what your investments are doing. Even if you open them up and see the arrow going up or down, at least you know what's going on. And also, you should also open your statements to make sure what you want to purchase is being purchased. Because if there's an error in your account and you don't catch that for a year, 6 months, you could have lost a lot of money potentially over that time. So even if you don't understand your statements, take your statements to a meeting with your advisor and ask them, what does this mean? What does that mean? What are these numbers? What's the fees? Because that way, when you get your statements from now on, you can understand them and you won't want to just throw them on the coffee table when they show up. Do not leverage large, high-interest loans to invest. This is an interesting one because a lot of people, they might take out a lot of money to use that to invest. Sometimes that can be a good strategy. It depends on your window of investment time. Because say you take out $10,000 to invest in mutual funds, but suddenly that goes down and suddenly those mutual funds are only worth $8,000. You still owe $10,000 on an investment that's no longer worth that much. But say you don't have the time, you want to use that money, say in 5 years, and you don't have the time for that money to rebound and go back to the amount that you purchased it in the first place. So you're spending money on an investment that isn't worth what you're paying for. So you need to know what your investment window is before you even consider something like that, because it doesn't work out for a lot of people in the long run. Do not make checks out to your advisor. We did a lot of some research last year in March around Fraud Prevention Month around a number of people, around people that were defrauded by their advisors in Canada and Nova Scotia. And I'd say 70–80% of them, the reason they lost their money is they made out their checks directly to their advisor. Never do that. If you make out a check to an advisor, make sure you make it out to their firm or their company or their fund. Never make it out to the advisor itself. Because if you do, they can take that and put it in their bank account and do whatever they want with it. They don't need to buy their investment that they just promised they're going to buy. They could do it, they could buy a car with it, they could put it in their own, go on vacation with it. If it has their name on the check, they don't need to put it in their investment account. They can put it in their own account. And we've seen that happen time and time again. And also, one thing we always tell people, if it sounds too good to be true, it probably is. Scams and frauds. Red flags of investment fraud. There's certain things, if you see an advisor or an investment, that you should know that it has a high potential for fraud behind it. The number one red flag for us is if you were promised a high rate of return for low risk. There's no such thing as a low risk investment with a high return. Because whenever you have a potential for higher return, it comes with higher risk. There's no other way around it. That's just the way it is. But even though I'm telling you that right now, most of you, if you were approached with someone told you that, you would want more information about it. I don't mean to say that because you're not smart people or anything like that. It's just the research that has been done in the past. The BC Securities Commission, during Fraud Prevention Month this year, they did a survey in the province. And one of the first question on the survey was, how susceptible do you think you're at a fraud? And most people say, I'm not at all, or no. And later on in the same survey, they asked the question, if you were approached by someone with an investment and they told you it had a high rate of return for low risk, would you be interested? And 80% said they would. So, another red flag, you have to act now and are given no time to think about it. A lot of scammers or fraudsters use high pressure tactics to try and make people make bad decisions without thinking about it. Because they tell them, you got to get in now, otherwise there's a short-term investment. If you don't window, get an hour, you won't be able to invest in this great opportunity. If someone doesn't give you the opportunity to research investment, there's probably a reason for that, because if you did, you probably wouldn't do it in the first place. So if someone doesn't give you the time to research or at least consider something properly, you probably should walk away from that investment. You will be given confidential inside information. Everyone know what insider trading is? And that it's illegal? Basically, anyone who doesn't know, insider trading refers to if you're given non-public information and you use that information to buy or sell securities, which is illegal. If another person gives you that information, that's also legal as well. That's called tipping. A person who has the information gives it to you, that's still insider trading. And the thing is, if someone's giving you confidential or insider information, you have no way to verify that as well. So you're hoping they're true, and if they're not, you're kind of out of luck. And you could have broken the law as well. Which leads to the next one. There's no credible source that can validate the investment. If someone gives you an investment tip and you can't find any other information or sources that validate that this might be a good investment or it even exists, you probably shouldn't do it. Which, again, sounds like common sense, but there's a lot of scammers out there who make fake websites, fake press releases, fake information, which scams will go into later on, that look legit, but unless you back that up with another source, it turns out to be a scam. And again, registration, which we've touched on a few times. The firm or advisor is not registered. Does anyone know who Earl Jones is? Earl Jones was an advisor in Quebec. He worked in Quebec for 30 years, never registered with the Quebec Securities regulator. And he stole $50 million from his clients over a 30-year period. And all those people gave him his money. I'm pretty sure nobody ever checks that he was registered because he never was. So always make sure your firm or advisor is registered to do what they're doing. Common scams and frauds. We'll just go over some of the more common scams and frauds so you can hopefully identify them if you ever come face to face with them. Affinity fraud. Anyone know what affinity fraud is? Affinity fraud is when you target members of an identifiable group. It could be a religious group, an ethnic community, a professional group, a club. Basically, and you're a part of that community potentially. So you integrate yourself in that community to gain trust with it. And then you try and sell an investment throughout that community because everyone thinks of you as one of them. You're a part of the community. I can trust this guy. He's got a great investment. It's a way to sell investment and gain trust without necessarily even deserving it in the first place. So we see it's not an actual fraud. It's a way to perpetrate another fraud through gaining trust through an identifiable group or community. Ponzi scheme. Anyone know who that guy is? That's Charles Ponzi. He didn't originate the Ponzi scheme, but he was the man who basically he made a lot of money off it the first time, so they named it after him. In the 1920s, he stole $20 million, which in 1920s was obviously a lot of money. Anyone know how a Ponzi scheme works? No? Okay, so basically, I would come to the three people in the front row and say, I have this great investment opportunity. You give me $500, and in a month I'll give you 20% return. So these three people give me $500, and in a month I actually do give them 20% return. But I didn't invest any of that money. I'm basically giving them 20% of their money back to make them think I have this great opportunity. And they get the money, and they continue to give me money, but they also tell the three people behind them about this great opportunity. So these three people also give me $500. In a month's term, I give them 20% of their money back. They tell four people in the row, they tell the people behind them, and the money keeps pouring in. I continue to pay these people their 20% with their own money, or if I'm smart, I can potentially talk them into reinvesting that money. They don't have to give them anything back. I give them a piece of paper that say, your investments are growing this much. But eventually, we keep going back and back. We run out of rows of people. When that happens, there's no more money coming in. I have no money to pay these people. The money that they were giving me, I didn't invest. I probably spent on my luxurious lifestyle. So then it collapses at the end, and there's no more money to give to people. The money's all gone. You may have heard of people like Bernie Madoff, Charles Ponzi. That's how those people operated and what they did. Boiler room. Anyone know what boiler room is? They made a really bad movie about it in the 90s. a few movies actually. Boiler Room is a group of people that do unsolicited phone calls. It used to be phone calls, not as popular phone calls anymore because no one has a phone anymore. So they use email, social media, forums. They promote a company that is soon to be listed on a major stock exchange. And it's usually around a major newsy item, like it used to be oil and gas. During the dot-com phase in the 90s, there was this big people pushing online businesses, gold, and now it's probably one of the, if people were doing it now, they probably use virtual coins or ICOs or Bitcoin. The thing is, though, those companies that they're promoting, that they're going to sell stock in, they don't exist. They're fake. So they make fake websites. Like I said earlier, they make fake websites, they make fake news releases, they make fake brochures and things that look pretty real. And we've seen these in the past where they use them to make the business look legitimate. And without looking for a secondary source, people invest in a company. They buy shares that are fake shares. So when it comes to time to get their money back, those guys are gone, and so is their money. Pump and dump. Excuse me. Anyone even know what a pump and dump is? A pump and dump is a stock price manipulation. It's found a new life recently online again. Used to be another phone call type thing, but again, it's more online now through emails, again, forums, Reddit, social media type things. Some scammers, they'll pick a penny stock, a stock that's really cheap, has no real value to it, and they'll promote it heavily through these streams, whether it be online. There used to be, a heavily phone call. There used to be a scam where people would hope to call people and hope to get their answering machine and leave what sounded like a wrong number message about, I'm calling my friend Bob to tell him about this great stock. And they do that to like thousands of people. So some people think, oh, somebody called Bob to tell him about the stock, but they called me instead. So I'm going to buy that stock now instead and make all this money. Which if you're calling 1,000 people and you get even 5 of those 5%, it works. So what happens is a bunch of people flood that stock and buy it. And as all these people are buying the stock, the price goes up rather quickly. But what people didn't know, the people that are promoting it already owned thousands of dollars worth of this stock already. So when the price hits a certain point, they call it the peak point, they'll sell all that stock, make a ton of money because they bought it when it was worth nothing. But it'll also bottom out the stock. It'll hit a point and it'll just drop rapidly. So anyone who bought in over the promotion, they basically just lost all their money because all the value just dropped right out of it. Cold calls, emails, social media, forums, Reddit. Again, that's more of the way people are perpetrating these frauds these days, obviously. Binary options. Binary options aren't as popular as they used to be, thankfully, because of some great work done by the CSA and the securities regulators across Canada. They used to be last year they were the greatest used frauds in Canada, probably in North America, actually. What is a binary option? Binary option is an all or nothing wager, basically. Basically, you pick a commodity, a currency, some kind of asset that goes up and down in value in a certain amount of time, and if it hits a certain number, up or down, you win your all or nothing wager. If it doesn't, you lose it all. It's the closest form to gambling investment you can get. And no one in Canada is registered to do this, but thousands of people were getting phone calls, emails about it over the last year. Except none of those people were registered to do that in Canada, as I said, because they're not allowed to register to do such a thing. And most of them were scam platforms. So basically what they would do, they would contact someone and say, invest $5,000 in a couple $100 in a binary option, and they'd let them win, because it was a fake platform. And then they let them win, and they make their investment go up, give them some money, and then they continue to push that investment on them. But since these are fake platforms, they decide how it ends up, how the investment will end up. Say, like I said, if a certain commodity has to reach a certain number, they can make it reach that number or not, because it's a platform that they're controlling. And to use these platforms, you have to use your credit card or wire transfer, which is another way they use to scam people out of the money, because they had their credit card number. So a lot of people lost a lot of money of that. There's been some law changes, or CSA instituted some new policies and regulations making binary options illegal in Canada. You may have heard that Facebook and Twitter have now made it illegal to advertise binary options on their platforms, which is a good way of curtailing this, thankfully. And the big one these days, ICOs and cryptocurrency scams. ICOs and cryptocurrencies can be legitimate investments. We don't want to, it's the new techno-savvy way to invest. And there are legitimate ways to do so. But ICO is an initial coin offering. It's a way to It's like an IPO in a way. It's a way,
It's initial public
offering. Sorry, it's like it's a crowdfunding way to make money for a business venture or a product. But a lot of people, since it's a new thing, are producing ICOs that are actually fake. They're producing ICOs for a business that they're not actually trying to create. They're just taking a bunch of people's money in, pretending they're going to do this business, and then taking the money and going away, saying the business either failed or just disappearing.
You've probably heard the Bitcoins. You've probably heard that term.
Because Bitcoin's in the news every day. It goes up $1,000, it goes up $2,000, it goes down $8,000. It's highly volatile, obviously. So since it's in the news every day, scammers are realizing that's the thing they need to pull frauds on now. Because people, if you hear something in the news every day, you think you know a lot about it sometimes. I don't know. I don't know a lot about Bitcoin. I hear about it every day. I read about it all the time. But it doesn't mean I know what I'm doing.
We get trained on it. And we still don't understand.
Still don't understand. I've seen 4 different presentations on blockchain, and I still don't fully understand it. But yeah, like I said, there are legitimate cryptocurrency and ICO investments. But if you're interested in one, do your research, do your homework a lot, because there's a lot of scammers out there. I was at a conference last week, and there was a guy from the FBI there, and he said ICOs, they've been investigating ICOs for about a year now, and about 80 to 90% of the ones they investigate are all fraudulent. And they're growing so steadily that they can't investigate them as fast as they appear. So if you're interested in that investment, do a lot of research. There you go.
Am I driving you crazy, Cody?
No, not at all.
So David's message there is avoid fraud. Don't become a victim to fraud. And did we already mention, yes, I know we mentioned, but check to see if the person you're dealing with is registered. Check to see if they're on the disciplined persons list. So we do we're part of you guys are probably familiar with the fact that PSC does this retirement seminar, a 2-day retirement seminar. So we go over and speak during that as well. We're one of the speakers for that. And I was doing the presentation. It's usually David's office that does it, but we had a change in personnel. So I was doing it for a while. And after one of the presentations, I had someone come up to me and tell me that their advisor was on the disciplined persons list. It's important to check. We're a resource. Just go on the website, make sure that your firm's registered, make sure your advisor's registered, make sure they're not on the disciplined persons list. So the investor complaint process, I alluded to that a little bit before, that we take complaints and investigate them. What we'd like to say, and this is not written in stone, is go to your advisor if you're comfortable doing that, because it may be a service issue more than a security violation. So if you have concerns, go to your advisor and discuss them with your advisor. If you are not comfortable doing that, go to the head office of the firm, the chief compliance officer. Call them. Don't even deal with local. You can just get the number for the head office, call them and ask to speak to the chief compliance officer. If you don't get any results there, you may remember, or maybe not, that I mentioned that I'm the manager of compliance and SRO oversight. SRO, self-regulatory organization. We have a number of them in Canada. 2 of them are the MFDA and IROC. Securities dealers, mutual fund dealers. So technically there's a layer. You have the mutual fund dealer firms here, then you have the MFDA, and then you have us. Now we recognize the SRO as a self-regulatory organization, and we allow those self-regulatory organizations to oversee their members. But ultimately we watch what they're doing and we conduct oversight of those organizations as well. So my point in bringing that up is, if you are dealing with a mutual fund dealer or a securities dealer, your next step is to go there. They investigate complaints, they bring proceedings against bad actors, just as we do. Ombudsman for Banking Services and Investments, OBSI, you can go there and lodge a complaint if you don't want to deal with any of the others that are on the list. The good thing with OBSI, well, the good and bad thing with OBSI is that they can not mandate, but they can suggest or indicate that the firm has to pay you something for whatever you've complained about. So that could be that your investments went down, and OBSI may find that they didn't take good enough know your client information. Remember, I emphasized suitability earlier, that the investments were not suitable for you. Therefore, the firm owes you that money back. Or it could be another reason, but they can tell the firm that they need to pay you that money. The problem is that mandate is not binding. Most firms will abide by that if they go to that arbitration process with OBC, but not all do. And OBC now has a list that those firms' names go on. Most firms will abide by it. The Nova Scotia Securities Commission, us, come to us if you are not getting satisfaction, if they're not doing anything for you, if you don't want to because you're uncomfortable, just call us. We'll field your complaint, let you know if it's a securities violation. If it's not, we'll try to help you in any way we can. And if it is a complaint that you need to file, we'll show you how to do that with us, and it will be investigated.
Okay. So these are some of the online resources we've mentioned already and some other ones we haven't. This PowerPoint will be posted on our website either later this week or early next week. So you don't need to worry about copying this down if you don't want to. You can get them from there. So that is our website, nssc.novascotia.ca. And we also have a Twitter feed, which we use to give investor alerts, press releases, certain information. We've also put our blog posts on there, which looks at certain investing terminology, educational topics. For seniors, the MFD has a great senior section that has a lot of different investing links on it. Serve Our Seniors is a NASA-related. NASA is a North America Securities Administrators Association. It has a lot of things about senior financial abuse, which unfortunately is a large problem also in the States and here. The Before You Invest Tools section on the CSA website, that's where you can find that checklist, as well as digital copies of the brochures you may have picked up today, as well as other brochures as well, and interesting topics on dealing with advisors, investment opportunities, certain investment types. The check registries and disciplinary list, which you mentioned many times, those are the two links to that. And our own complaints section of our website, which are where you would go to file a complaint about an advisor or if you were contacted by someone who you think may be fraudulent or scam.
So did we mention that you should check registration?
I think so. We also have a Before You Invest blog on our website, which we update at least once a week with a question or which looks into some basic investment things such as what does Nova Scotia Securities do, why should you invest, how do I start investing, what are mutual funds. We also get into some more broader topics. We do something on ICOs, cryptocurrency, not too long ago. Basically, we try and get questions from the public to decide what to put on there or what's hot topic issues. That's why we did an ICO one not too recently. So if you go on there, you can take a look at that. Also mentioned our Twitter feed again. I mentioned we do investor alerts whenever we have them. Basically, if we find out someone is targeting Nova Scotians with a scam or a fraud, or if they're trying to sell securities without being registered to do so, we issue an alert about that. We've had about 4 or 5 this year already, a number of them ICO or Bitcoin related. And I'll tell a quick story about why these are important. Last week we had a phone call from a gentleman in Alberta called, his name was Stan. He went to his bank to invest in a company called, what the hell was the company called? Well, it was International Commodities Group. He went to his bank to wire transfer them $5,000. And luckily the teller that he talked to found this to be suspicious because when you wire stuff offshore, your chance of getting back is probably almost 0. So she helped him do a little research. He Googled the name, the company's name, and it came up, an investor alert we issued against this company back in December about selling securities or advising in Nova Scotia without being registered to do so. So they called us, asked us for more information about it. We told them they're not registered to do so. If you send that $5,000 to them, you'll probably never see it again. And luckily, Stan didn't do that. He saved $5,000. So if you follow us on Twitter or check our website frequently, we have an investor alert database as well, where we have a list of all the investor alerts we've issued over the last 5 years to let people know you probably shouldn't invest with these companies, or if you do, be very cautious in doing so.
Is it me? Well, we're so technically inclined, honestly. We actually had Facebook for a while, but inquiries, Twitter, follow our Twitter feed. But you can go on, even if you're not on Twitter, you can go onto our website and just sign up for our feed from our website. That will go to your email as well. That might be, you know, an option if you don't have the Twitter account. And toll free, is that our toll free number? I don't know everything. So that's our presentation. And do you have any questions? Does anyone have any questions? Yes. Oh, yes, sorry. I'm sorry. If we could, we're going to let Cody move that microphone up. And if you're comfortable coming to the mic, that'd be great.
Just have to have one in the room here.
I do want to just say as well that we have one of our co-workers here with us, Mr. Brian Murphy, who is the registration section of the commission, so we can all try to answer whatever questions you may have.
It's very simple, I think. I believe it was last year, or somewhere about that, where it was, if I'm using the right terminology, legislated that financial advisors had to disclose, or all financial institutions were to disclose their fee for service. Would that be correct?
Yes.
Am I saying that right?
Yes. So, well, how they get paid.
Right, exactly. Yeah. So my question would be, how would I go about asking, or what should I expect from my financial advisor on how that information should be disclosed? I've had a financial advisor for about maybe 6 or 7 years. The only fee that I know for sure that I pay is that registration fee to have my RRSPs registered every year. You know, that $57.50 that comes out of your account. Yes. Around this time of the year. But how should I ask that question to my financial advisor, and how should I expect that information to be disclosed to me?
Well, you can just ask. You can simply ask. And again, I come back to, I only say this because we run into it a lot. Many people feel uncomfortable asking certain questions like that, and some people don't care because they understand it's your money, so you have the right to ask that question. So you can simply ask them, how do you get paid? But aside from that, there is a requirement. So we have, in our legislation, we have a very large rule that is a registration and operating rule, 31103. And that is updated and changed on an ongoing basis. And there are requirements and a specific way that advisors, dealing representatives, have to disclose how they are paid and exactly what it is. I don't know if you want to add something to that, Brian.
It should be in your statements somewhere. In the statements now are mandated to be a lot more detailed, and in that there should be a breakdown of how the fees that you are being paid, even though you don't see it coming out of your actual investment. It could be something like a fee if you're in mutual funds. It's called a management expense ratio. So say 2% of your mutual funds every year go back to the dealer to pay him. So if your mutual fund made 10% on your statement, it actually made 12%, and they took 2%. Mm-hmm. So that's mainly how a lot of these guys, and you don't actually write a check for their fee, you pay.
But there is a reporting requirement. Yeah, they do.
I just don't know what that looks like.
Well, so that would be on our website, and it would be on. So if you were to go to our website and search 31103, it's. I hate to send you there in this way because it's difficult to find information sometimes, but the actual form under how they need to report their fees is in there. But they do have to put their fees on the statement. Yeah.
And I'm sure it's there, it's just probably, and like many people, get the statement, I'll go back to it, we don't look at it.
They've done it. We can only tell them what information we want them to give you. We can't tell them, we can't mandate the format that it has to look when you get it. So every firm has to give you that information, but in the manner in which they lay it out for you could be different. So it may take a little bit of, not investigation, but a very close look on your part to dig out that information. should be there.
I would just add one thing to that. I really want to emphasize for those that may be uncomfortable asking some questions, it's your money. Ask the questions. And if you ask the question, how do you get paid, and they give you something and you don't understand it, then you sit there and ask them till you do understand it. An advisor who is rushing you or doesn't give you a fulsome answer until they're looking at you, say, oh, okay, I understand, that's a red flag too. It doesn't necessarily mean it's a red flag that he's doing something untoward with your money, but it's a red flag perhaps that you two aren't going to work well together. You need someone who will take the time to explain to you exactly what you need to know, including fees.
Hi there. Wondering if you could talk a little bit about the distinction, if there is one, between financial advisors who are employed with a financial institution like Royal Bank versus a financial advisor who may be private, like with a Gordon Stewart.
From our perspective, nothing. The registration is, Brian can speak to this, the registration is the registration. There are boutique, individual, standalone firms, and there are very large banks. When you are registered under a specific category, from our perspective, there's no difference. We examine you, and we expect the procedures and policies and everything to be the same. Do you want to address that a bit?
Yeah, that's exactly right. There is no difference. Everybody has the same proficiency requirement. Everybody's held to the same standard. If you're registered to sell mutual funds, it doesn't matter what size institution you work with. Everybody's on the same playing field, same level playing field, same reporting requirements. Everybody has the same thing. So there shouldn't be any difference in the amount of service or the amount of information or ability, regardless of where they are. If they're registered in the same category, everybody should be the same.
Great, thank you.
May I?
Sure.
Go ahead. But is it not the same as, say, a mortgage broker who has access to a whole bunch of products that might be represented by financial lenders versus, say, going to CIBC or going to RBC and dealing with a mortgage specialist there who only accesses the RBC product? So is it fair to say that a brokerage investor would have access to more funds?
They can.
Yeah.
They can. I used to work at one of the big banks, and that was a while ago. And even then, you know, every bank has their own family funds, and they have third-party funds that they're allowed to deal with as well. There should not be any pressure on a bank employee to push their own family of funds. They have, that individual that you are dealing with has a responsibility to you as their client to give you the product that's best for you.
That's on their shelf.
Yeah, that's on the shelf. It is possible that some dealers have access to other mutual funds that another dealer doesn't. And there's all kinds of reasons for that, but basically it comes down to the size of the business and you know, kind of dealings with the wholesaler of that fund itself. So it doesn't say, it doesn't diminish the ability of one dealer that doesn't have that. That doesn't mean that this dealer is bad in any way. They just don't have a business dealing with that particular mutual fund family. So I don't know if I answered that, but there are, it's possible some dealers can access other funds that other dealers can't. Yeah.
But there's lots of investments out there that are, you can have this investment here by one firm and this investment by another firm, and they can be very similar in their structure. So, you know, there are a lot of conversations going on today about securities regulation always and how we can make it better. And that's one of the things that we look at is how can we be fair to all investors by ensuring that anyone you go in to see to deal with your investments has a reasonable product line to offer you the investment that's most suitable for you. And I don't want to get too much into the weeds with regard to how people are motivated or paid or anything, although I think it goes without saying that you can motivate people by the way you pay them. I will also say this, I'm not going to speak to every firm, because when we go in to examine them, that's when we look at how they're paid to see if they are dealing with clients in a fair way. We have legislation that states that. Are you dealing fairly with your clients? In particular, I know of one large bank where the representatives there are paid exactly the same no matter if they sell the bank's funds or the third-party funds. They do not make more money for selling the third-party funds. That is not to say that all banks are like that, or that all investment establishments are like that. But that's why it's important for you to ask the questions. And this resource information that we have here, please call us. If there's something unclear, if you're asking them something that you don't understand, if you think there's some kind of activity going on that seems not above board. And it doesn't even have to be as serious as that. Just feel free to give us a call. Does that sort of answer your question?
Yeah.
As far as the suitability fit, that happens between the financial advisor and the client.
Correct.
That has nothing to do with you folks, right?
No. Well, when we do compliance examinations, that's sometimes when we're looking at suitability, that's the basis of how we're determining if it's suitable for you. What questions did they ask you? What does their document look like? Did they take notes? Is there enough I ask myself, is there enough information that that representative took that tells me that they understood the investments they suggested to you?
It's like a needs assessment. Yeah, it's a good check for imbalance for them though as well. Yeah, make sure that they're meeting.
Yeah, so they'll all have a form to remind them of what questions to ask, but we look for more information than just, knowing your client. The KYC rule is much more than ticking boxes on a form. We're looking for the notes they took, what conversations they had. And when we interview representatives, we'll ask them those questions. Where are your notes for this client? How did you know by this that this was an appropriate investment? It doesn't seem appropriate, those types of things.
The pump and dump thing that you had mentioned, stockhouse.ca, are their posts regulated, or are they screened, I guess, before they're put up there?
Sorry, who did?
Stockhouse.ca is a forum for posting that people used to post for investing.
Oh, okay.
No, okay. I just wondered if there was any kind of an oversight on pages like that as far as people who own securities share information on there.
Okay, so there is a trigger. There's a trigger in securities legislation where you're now selling investments and you have to be registered with us. So there's lots of activity that goes on in our province that's, it's on the edge, let's just say. So we try to be proactive in going out and examining and checking on different activities that are going on with firms, but we also rely on tips that come to us for things like that. Maybe a website that somebody's got up, and we'll go there and we'll look at it and say, is this giving investment advice? Have they breached securities laws? Do we need to shut them down? Do they need to be registered? What are they doing?
But to the specific question on Stockhouse, none are registered.
Oh.
No. It's just a public forum where anybody can spew whatever they want. So
believe what you will. Okay.
Use that at your own caution, yeah.
Anything you're getting on the internet, right?
Yes. Sorry, I'll try and speak loud. I'm not going to go all the way over there.
Sure.
So if you manage your own portfolio, but you still want some kind of additional advice from some form of financial advisor, how would you go about finding one that was appropriately qualified, and how would you go about paying them? Because they have to get paid somehow, obviously, for the service of advising. Do you pay them like a lawyer, for example, on a per hour basis, or how does that work?
I don't know that it would work. I don't know of circumstances where you'd find an advisor who would do that. They get paid by managing your portfolio, so you have a choice. If you don't have the knowledge, say, or you have questions and you're managing your own portfolio, you'd have to basically go get that information on your own. When you decide to manage your own portfolio, you're sort of taking certain risks on. I don't know if, Brian, over the years, if you've, I don't know of an advisor.
I've had that question before from people in the industry, and there's no regulatory reason why we wouldn't allow them to do it if they met all the conditions that are required by any other client's registrant's agreements. It's simply that on a business end, on their side, they would have to charge you so much money for the amount of time they have to put into it to make an actual qualified suggestion for you that it's just not in their business to do that. I mean, I can't guess on what the fee would be, but it would be thousands of dollars. And, you know, and your investment isn't just a snapshot, it's an evolving thing that they should be always monitoring. You know, there are financial planners out there that aren't registered that could give you oh no, actually they can't. They can only look at your entire situation.
Yeah.
They might do it for a fee, but they cannot give you any advice on a specific security, what to do. So it just doesn't exist. That business just doesn't exist.
But I would say this, if there are those of you here who have a fair bit of knowledge on investments and you want to manage it a little bit on your own, maybe if you're not confident enough to do it all on your own, you could take a small amount of money that you're not overly concerned about, and you could learn with that if that's something that you wanted to do. I say that with caution. You know, if you're out there, you know, and there's a possibility you could make mistakes and, you know, lose that money, but it is a way for you to do it without putting your portfolio at risk. And then you've got that other money someplace else, and you don't have to pay that exorbitant fee to have that managed by the advisor, because they get paid through managing it.
Do they tend to be paid, this is ballpark, because I know nothing about that, commission, or how do they generally tend to be paid, a financial advisor?
They can be paid a number of ways. So, I mean, yeah.
It depends on the service. If you're dealing with a traditional stockbroker, most likely it's going to be commission for every trade that you do. But a lot of them don't trade like they did back in, you know, the 80s, where you're buying and selling individual stocks every couple. Even the stockbrokers are leaning more towards managed products, mutual funds, and wrapped accounts, things like that. It's just the way the industry is evolving. But most of them, everybody else is either going to be a percentage of your net worth of the account, you know, 1%, 1.5%, or if it's a regular mutual fund dealer, it's probably going to be out of that management expense ratio again. So basically the same thing. They take a small percentage of the value of your total account and get paid that way.
It starts getting costly. There is such a thing that we refer to as churning. So some advisors will take a portfolio and they'll just sell and buy, and they make money that way. It's very expensive for you. So, you know, if you, again, we probably qualify some here that these are my views and not necessarily those of the NSSC, but, you know, churning your account, I don't know who that's good for. If you want, you know, if a person wanted to have some fun and learn and take a small amount of money, I suppose I could see that if you had an interest. But if we're just talking about investing your money for long-term growth or to reach specific goals, churning is not going to get you there. It's an expensive proposition, and advisors make lots of money on doing it. And we question that a fair bit when we're out doing compliance reviews. Yes, I seem to go. Yeah, we'll go right through. Yeah.
Okay. Is there an average administration fee, and who establishes an administration or management fee for advisors?
The management expense ratios are embedded in the mutual funds if you're buying mutual funds. Those are set by the fund. You need the information they give you, just look right at the advisor and say, where's the MER? So you can look at it. It's not set in stone. That being said, we do question high fees and how they can mitigate those, or, you know. The MER on funds can range from, I don't think I've seen anything lower than 1. Have you?
1 to 3.
Yeah, one to 3.
High.
If you're paying 3 on a mutual fund, you need to look for a different mutual fund. There's better ones out there for less cost. Sorry, I think there was a question up here.
You talked about compliance and auditing. I'm just wondering how habitually that's done, and so would it be reasonable for me to expect that my financial institution or even my advisor will have been audited in the last number of years?
So there's a bit of a multi-leveled approach, again, because of the Mutual Fund Dealers Association and the Investment Industry Regulatory Organization of Canada. I just wanted to say those out, but the MFDA and IROC, they oversee their members in Nova Scotia. That being said, we oversee them, and in Nova Scotia, unlike many of the other provinces, we also conduct reviews on their member firms. What we try to do, so we also have firms in Nova Scotia that don't have an SRO. Those firms are our priority, the ones that don't have a self-regulatory organization. So portfolio managers, scholarship plan dealers, those types of firms. So we do get around to them on a regular basis, probably once every 3 years. For the SRO firms, because they are basically overseen by their SRO and then us, we don't see them as often. So if you are dealing with a mutual fund dealer, the Nova Scotia Securities Commission may not see them on a regular basis because the Mutual Fund Dealers Association is reviewing them individually.
Is it reasonable to ask your advisor when was the last time there was an audit here? Or?
Sure. Yeah, I mean, we don't compel them to give that information. You can ask your advisor anything, you know, and I would think that any advisor who wants to deal with you would go out of their way to provide you with an answer to that question. There was another.
So is there a certification called personal financial planner, like a P,
Yes.
P something? That's registered, or I should check the person's name whether.
If they have the PFP designation, they could be registered. But if they're just operating as a financial planner, they don't have to be registered. But many financial advisors that are registered with us have those financial planning designations as well. So just ask the question.
So it's best to find the financial planner than it's best to find financial advisor than financial planner, because that person, advisor, will have more.
Just depends on what you, yeah, it just depends on what you need, what you want. If all you want is a financial plan, if you're not really looking for specific investment advice, financial planner is fine. But if you want a financial plan and then to implement it and to get specific recommendations, then you need someone who's registered with us.
And it's best to find a person with your main bank yourself, right?
Someone in your bank?
In your bank, right?
Not necessarily. I mean, we're not making any recommendations one way or the other. I suppose there's people who maybe do all their banking at Royal Bank but go to another firm for their investments. I mean, you know, it's possible. But if you like your bank, if your bank happens to be whichever and you like it and you're comfortable there, you know people, you can ask them for recommendations of people to see in that organization. They will have people who are on the MFDA platform and the IROC platform, both. There's a question up here.
If you start a financial relationship with a financial advisor and for whatever reason it's not working out, is there safeguards or a formal way to sever that relationship to switch to another advisor?
There are requirements on that advisor to promptly transfer your investments, to you know, you're just talking about if you leave, right? If you go someplace else, yeah. So you would basically go find another advisor and then tell that advisor you want to move the money, and the first advisor is obligated to promptly deal with that request.
It's costly
charge you fees for
They
transferring.
cannot charge you fees for transferring. If there are fees, it's because of the type of investment that you're in. So again, that comes back to knowing what you're investing in. So DSC fees, deferred sales charge fees, that can be a problem because when you purchase them, even though it's a mutual fund, it's loaded towards the front. So the longer you have your money in the investment, the less the fee is when you take it out. There are lots of funds out there that do not have deferred sales charges on them. If you purchase those mutual funds with no deferred sales charges and you move advisors and you transfer your money, there typically is not a fee. Not to my understanding, Brian, and unless it's registered.
No, yeah, sometimes they can charge you to transfer a registered account only because there's actual work that has to be done with CRA.
It's usually only $25 or $50 for that.
It's not a huge amount, but you can transfer, as long as the receiving institution deals with the same mutual funds, you don't have to sell your investments to switch dealers.
I was talking about the fees that they charge.
The fees that they charge should only be the kind of fee that, as I mentioned, like a transfer fee for a registered account. You know, it's possible that some guys might charge you like a closing account fee or something like that. I have heard of those, but again, that's kind of a client agreement thing. It shouldn't be very much. And you would have to check your client agreement that you signed when you opened up the account. No dealer or advisor owns your securities. It's always in your name. They are only holding it, same as the individual advisor. You know, if you're not happy with any dealer, firm, or advisor that you're dealing with, you have the right always to go somewhere else. Transfer that out in kind. You don't have to liquidate your investments. You should be able to transfer everything over. Again, there could be a fee for a registered account to be transferred, and might be a small fee to close out your account, but they're not going to keep 10% of your investments when you go.
No, I wasn't sort of looking at that. Was this that having, let's say, an RRSP in 3 different places, but you had your main investments with, let's say, Edward Jones or something. So then you try, as you want to get closer to retirement, you want to make sure that everything is in the same place. So you take these smaller RRSPs or whatever, and to get them into the same place, so it's all managed in the same place. And each place is saying, okay, then we're going to charge you $50 or $100, like to move that. And every time you do that, let's say you have 4 different places, well, all of a sudden you paid $400 for maybe it was a $1,000 RRSP. So it's like those sorts of things you don't know about until you actually go to do it. So it's a heads up to anybody that has done that or thinking about doing that.
That's always something that's out there that you have to read the agreement that you signed with the day you open the account, and always feel free to ask if there's going to be fees in the future if anything happens like that.
Yeah, they're not thinking of that at the time
No.
because it's not a big investment, right?
Yeah.
And you're trying to diversify or whatever, right? And maybe that one had a good rate of return or something like that, but in the end, and the other thing is that if you are, let's putting it all into one management place or advisor, sometimes they will actually cover that cost because they actually want all of your investments in one place.
That's true too,
so
yeah.
it's good to ask
Some
that
will do
question.
that, yeah.
And if they say yes, then make sure that they actually do it when the fund gets.
So that is just a heads up about fees. In terms of a registered account, there's always a fee. There has been, I don't know, and they could waive it, but there's always been a fee to transfer registered accounts. But for non-registered accounts, there shouldn't be a fee, except, as Brian said, they might charge a small admin fee to transfer that account, but it is good to, to make sure that you know. Does that answer your question?
It does, and I was also kind of questioning like privacy and that sort of thing. I'm assuming they're bound to keep your information confidential.
Absolutely, yeah.
I guess just to that note, as far as making a complaint, how do you even know what you have grounds to make a complaint for? Would it be based on the agreement that you would be making with that advisor up front, or how do you really know? Because if I'm not educated and I'm trusting my financial advisor to do whatever it is they need to do for me, how do I know what I should be complaining about?
Well, I guess the only way I can answer that really is if you feel there's something wrong. I mean, it's up to you to, you know, if your investments are being invested well and you're happy with them, great. If you're not, then is that a complaint that you can lodge? If you feel that your advisor has done something they shouldn't have done, that you didn't give them permission for, that's grounds for a complaint. I think I want to say it's if you're unhappy, but it's not really, because it could be a service issue, right? Which is not a regulatory issue, which means you just have to leave because they're not a good firm or not a good advisor. But if you feel that there's grounds for a complaint, such that they've done something that sounds like it's a regulatory breach or, and by that, to simplify it, I just mean to say that you've signed an agreement and you go in to see your advisor one day and you're looking at your portfolio and saying, these are really risky investments, they're down 30%. I told you I had a low risk tolerance. Well, yeah, you should make a complaint. So I don't know if that helps.
If you feel, you can complain to us about anything, frankly.
It's true.
The only thing is when it gets to us, one of the investigators will take a look at it and make a determination if it's what we call a service issue. Say your representative doesn't call you back for 2 days, or you know, your statements are always late, or you know, they're rude, or they're charging you an extra fee for Wednesdays if you call afternoon. I don't know. Like anything like that, the investigator will look at your complaint and then get back to you and say, you know, I'm sorry, this is what we call a service complaint. And that means that it's not something in violation of a specific securities rule. That's really the only thing we can take action on.
That's what I wondered.
If it's in a rule and they violated it, then we take action. If it's not specifically spelled out, then it's a service complaint, and it's, you know, it's.
Well, I will.
You go on your own with the firm, or if they don't give you satisfaction, you bump it up the line to the ombudsman.
Or sometimes what's happened with us is I have had people call me with a complaint, and I've explained to them that it's not a regulatory issue, but it's a concerning issue. For instance, perhaps someone's tried to transfer their accounts out and the advisor is not acting. I've seen many times where we've made calls and it's been fixed pretty quick, even though it's a service issue. So don't hesitate to call us, because we in certain circumstances, we can make a call and just say, what's going on? You know, explain to us what the problem is, and this is what the client is saying. So we do that sometimes, and then we talk to the firm and they'll explain what the situation is, and it could be that they actually are sitting on it for whatever reason, or there could be a reasonable explanation, and we'll go back and tell the client and it gets fixed up pretty quick. So don't hesitate to call us, like Brian says, with, you know, any concerns. It doesn't have to, you don't have to know if it's a regulatory issue. We'll help you. We'll help you deal with that. Any other questions? Concerns? Comments? All right. Well, thanks very much for joining us. We're really happy that you did. We want to make sure that, you know, you're doing good with your money.